Good evening and welcome to this session of the virtual live coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. Yesterday, we began the topic, the Negotiable Instruments Act, 1881. Before we begin, let me as usual invoke Om Sahana Bhavatu Sahanau Bhunathu Sahavidyam Karvavahai Tejasvinavaditamastu Ma Vidvishavahai Om Shanti Shanti Shanti. Fantastic. So we have good friends Alok here, Dhyanesh, Manoj Kumar Thakur, Nikita Namal is here. Good evening, madam. Harshit Jaiswal, Pranay Vasishta, and of course. Yes, last day for financial year, last day for sessions, batch 6, and last day for this paper. Correctly pointed out. Anyway, let's hope that we'll make it a very memorable evening with good understanding of the subject, etc., etc. So, I'm quickly going to run through the slides, which are already taught. We made good progress, and very importantly, one term needed explanation. Holder and holder in due course, right? This concept, once you understand it, much of the points in negotiable instruments would become clear to you. So we need to understand who is a holder and who is a holder in due course. To understand holder and holder in due course, this diagram becomes important. I may have to come back to this diagram to explain holder and holder in due course. Okay. Now here, what you need to understand is, other than the drawer, everybody in this chain, endorsee, a payee who becomes the first endorser, endorsee 1 who becomes the second endorser, endorsee 2, all of them are holders. All of them are holders. See, since acceptance is not there, I'm not teaching acceptor and acceptor for honor. No need. Your syllabus acceptance itself is not there. That's why I'm leaving it out. Holder and holder in due course. Again, to repeat, everybody in the chain is a holder. The payee is the first holder. He becomes an endorser. He endorses it, means he gives it to somebody else, endorses and delivers. That new guy becomes the endorsee, holder. He endorses, he becomes the endorser. The new guy who takes it from him, endorsee 2, is again a holder. All are holders. Means they are holding it, literally holding. The holder of a promissory note, bill of exchange or check means any person entitled in his own name to the possession thereof and receive or recover the amount due thereon from the parties thereto. So he should be entitled in his own name, which means what? He should be a payee there. Then he is entitled in his own name. Endorsee is entitled. That's all. So the holder should be a person entitled in his own name. So first of all, he must be a bearer. With regard to negotiable instruments, one important point you should note is physical possession of the instrument is a sine qua non. Fundamental condition. You have to have possession of the instrument. Possession. In your possession. Show it. So you are a holder. If you are entitled in your own name. If it is a bearer instrument, for example, a bearer check, because you cannot have a bearer promissory note, you cannot have a bearer bill of exchange, but you can have a bearer check. Check payable to bearer or check payable to a person in his name without crossing, which is reversed and signed by him in blank. A self-check signed by the account holder in blank is a bearer check. Because payable to self, I am entitled to it, I have reversed it, signed. I have not mentioned whose name. It becomes open now. Anybody can go to the bank and take the cash. So bearer instrument. So he must be the bearer of the instrument and he must be entitled to receive or recover the amount due on the instrument. This is holder. For holder in due course, slightly more definition is there. Holder in due course means any person who for consideration became the possessor of a promissory note, bill of exchange, or check, if payable to check, if payable to bearer. Okay, please note. Or the payee or endorsee thereof, if payable to order. Again and again, I repeat, the promissory note and bill of exchange cannot be made payable to bearer. Check alone payable to bearer. So the possession of a check payable to bearer for consideration is a holder in due course. He is also a holder. The payee or endorsee thereof, if payable to order. Where an instrument is payable to order, you can be the payee or the endorsee. So, payee or any of these endorsees would be holders. Definitely. Will they be holder in due course? We have to satisfy one more condition. They should have received it for consideration. They should be bearer of a check payable to bearer, or payee or endorsee if it is payable to order. He should get possession of it before the amount mentioned in it became payable. So, that is when the day, see, if a promissory note is payable 30 days later or on 15th of April, I can present it on 20th of May, but I should have come into possession of the promissory note before 14th of April, before it became payable, without sufficient cause to believe that any defect existed in the title. So, the holder, difference between holder and holder in due course is, holder takes it in good faith. We saw the word in good faith when we studied General Classes Act. I even mentioned I will talk about good faith when we come to holder in due course. Holder in due course takes the instrument in good faith. In good faith, he takes it, and he takes it without knowledge of the defect, if any, in the title, if at all. Okay. A holder in due course is a slightly different from holder. But a holder in due course should be a holder. He should be in possession as bearer or payee or endorsee. He should have become the holder before the amount mentioned became payable, that is before maturity. He should have become the holder for valuable consideration. And he should not have sufficient cause to believe that any defect existed. Means he should take it without any knowledge of defect in the title of the party from whom he received it. Now the holder in due course has many privileges. But before we go there, I will keep on pushing back to this diagram. Let us look at it this way. A is the payee, or rather B is the payee. A is the drawer of a check on a bank, some bank, XYZ Bank Limited. Don't worry about drawing. Now, A is the drawer, B is the payee of the check. B is the payee. He has obtained this check. He has obtained this check from the drawer by misrepresentation or fraud. He has made a fraudulent statement to the drawer. Based on that fraudulent statement, a check has been given to the payee. Let us say that it is generally crossed, not account payee, generally crossed. Right, sir? Now the drawer believes the payee and he gives the check. That payee now endorses it to endorsee 1, who gets it for consideration before the date, maturity of the C. For a check, it can be presented up to 3 months of the date. So he gets it within the validity period of the check. He gets it for good consideration. Endorsee 1 gives money to payee on the check. Whereas payee has not given anything, fraud. For example, payee says, I am the owner of that land. I will sell it to you. Some bogus agreement they put. Based on that agreement, the drawer gives him a check for 10 lakhs. Now that 10 lakh check is with him. Right, sir? Now, that land does not belong to the payee. Fraud. The drawer is an idiot. He has believed him and given the check. Don't ask me how he gave. That is an idiot. There are a lot of idiots. A fool is born every day. They will give check like this and come. Then only they'll come for the dispute, etc. Otherwise, lawyers can have no business if fools like the dryer do not exist. Only then there will be a dispute, a case will come. That is not. Our learning is holder in due course. So, dryer given check to payee. Payee practiced fraud. So, payee's title is defective. Now, the endorsee 1 pays 10 lakhs to payee, or endorsee 1 has to be paid 10 lakhs by payee, whatever. There is some subsisting due, whatever, some transaction underlying. A valid transaction, and in consideration for that, endorsee 1 gets the check, 10 lakhs. Payee endorses it. He turns the check, puts the endorsee's name, signs. Payee endorses it, valid endorsement. Endorsee 1 gets it for consideration before the maturity without any knowledge that payee has practiced fraud. All that endorsee 1 does not know. There is a check drawn by, signed by one gentleman on a bank. He believes it and he takes it. Now, he in turn endorses it to endorsee 2, who then present it to the bank for payment. Bank gives the payment. Now, suddenly dryer realizes that this is a fraud. So he goes to the payee. Payee says, I have already endorsed it. Now, can the dryer sue endorsee 1 and endorsee 2? That is the privilege of holder in due course. See, a holder in due course cleans the instrument. Okay, the holder in due course cleans the instrument. Okay. Every prior party to a negotiable instrument is liable to a holder in due course until the instrument is duly satisfied. Prior party may be maker, dryer, acceptor, or endorser. So in our example, let us assume that the dryer is also a fraud. Dryer is also a fraud. Now, the dryer gives a check to the payee, that got endorsed 2 times, right? That check, when it is presented, is dishonored. Of course, they have remedies for dishonor, etc. But in the meantime, endorsee 1 can proceed against the payee and the dryer. Endorsee 2 can proceed against endorsee 1, payee, and the dryer. And the dryer cannot say or argue with the endorsee 1, the check was given fraudulently, I don't have to pay it. That is not a problem for endorsee 1. Why? Because he is a holder in due course. All prior parties are liable to the holder in due course till the instrument is duly satisfied. Prior party may be a maker, dryer, acceptor, endorser, whoever. Okay, now we will see section 20. The signer of an inchoate instrument shall be liable upon such instrument in the capacity in which he signed the same to holder in due course for any amount specified in the instrument. Let us say that the dryer in our example is a further idiot. What he has done, instead of writing 10 lakhs in the check, he gives a blank check payable to the payee. What the payee does, he fills in. 10 lakhs is the deal now. He fills in 15 lakhs and gives it to the endorsee 1. Endorsee 1 takes it for consideration in good faith, without knowledge of the defect, before the maturity, etc., etc. Now he becomes a holder in due course. When he in turn endorses it, the instrument goes clean, so that the dryer has to pay whatever is stated on the check to the endorsee 1. But the payee cannot enforce, the holder cannot enforce. Why? Because between them the contract is there. Only the amount agreed to be paid will be paid to him. But as far as endorsee 1 and 2 are concerned, they are holders in due course. They are entitled to claim any amount mentioned in the instrument. Right? I'm using check examples rather than bill of exchange, because checks are easy to understand. I'm using check examples, but some principle is the same. Okay. Inchoate instrument. As you know, an inchoate instrument is one which is incomplete in some manner. In my example, the inchoate instrument was incomplete as to amount. Okay. Another privilege. Suppose a bill of exchange is drawn on a fictitious name, and payable to the dryer's order. Please understand, can a bill of exchange be drawn on a fictitious name? No problem, so long as it is honored. Okay, if it is honored, it will be retired, that's all. An acceptor of the bill of exchange is not relieved from liability to any holder in due course claiming under an endorsement by the same hand as the drawer's signature. In other words, the acceptor cannot allege that the name was fictitious. A bill of exchange is drawn on a fictitious name and payable to the drawer's order. Now, an acceptor of the bill of exchange is not relieved from the liability to any holder in due course claiming. Let us go back to our diagram. I'll be keeping on going back to this diagram. Drawer's name is Mr. M. Drawee, the acceptor, knows that he is Mr. M, but the drawer draws it as some other name, Mr. X. Drawee knows that it is M, but he sees the name X and he agrees and he accepts it. So that instrument is in the hand of the drawer. An acceptor of the bill of exchange is not relieved from liability to any holder in due course, claiming under an instrument by the same hand as the drawer's signature. Same hand means same handwriting. At that time, see what has happened? M has drawn a bill in the name of X. He has called himself X. It has gone to the drawee. Drawee has accepted it knowing that it is M, but name as X, because signature is M signature. Now the instrument comes to the payee. Payee endorses. Endorsee 1, holder in due course. Endorsee 2, holder in due course. The endorsee 2 goes to the drawee or the acceptor. At that time, the acceptor cannot say, hey, that X, that is not X, yeah, that is M, why should I honor? Because you accepted it now. You are liable to a holder in due course. Got it? These are all privileges of a holder in due course. I'm doing my best to explain it with examples and to simplify it. See, the nature, see, you are not having acceptance in your syllabus. So you have, this part of it is a legal requirement. Because, see, the drawer is drawing it and giving it to the payee. Now the payee has to take it to the drawee and show it to him. Okay? That is called acceptance. Only after acceptance, it will become, he will become acceptor. Otherwise, he will not be, if he does not accept it, if he dishonors it for acceptance, the payee will come to the drawer and the drawer will become liable. Any endorsee, suppose payee endorses it to endorsee 1, who presents it for acceptance? Acceptance is not done. Dishonored for acceptance, then it will go back to the drawer. Drawer will become liable. Endorsee 1 can sue payee also. The minute, but if this fellow accepts it, then the bill gets its life. Then, till it is discharged by payment. It is presented for payment, discharged. This is the cycle of a bill of exchange. This is what the law is. Whether you like it or not, that is how the law is. Okay, you don't like the law, I can't do anything. This is how the law is. I'll explain to you in the real sense how it happens. For that, you have to go back to the history that I told you yesterday. It will become easy. See, there is a gentleman, a trader in Gujarat. Okay, let us say, for example, Qasim Ali. He is dealing in a lot of goods. So he purchases a lot of goods, puts it in a ship. Now, he has to he wants to buy goods from Dubai or Muscat and bring it to India and sell. So he decides to go all the way to Oman, the Sultanate of Oman, into the city of Muscat. Right? Nothing wrong in that. He wants to go there. In those days, British period, 1881, let us say for the sake of convenience, 1895. Now, this guy has to go all the way on the Arabian Sea in a ship. If he takes gold coins with him or any other currency with him, he may be robbed. Therefore, what he does, he is living in Surat. Qasim Ali lives in Surat. Surat goes to Hemant Shah, a famous Shah in the city of Surat, well-known Gujarati merchant and moneylender. And he says, Shah, I'm going to Oman for buying goods. Chalo, go. What can I do? Go. No, I need some money. I don't have money, get out. No, I don't need money. You give me a promissory note. Okay, I'll give you. Then what this fellow does, he gives him cash, takes the promissory note. You're able to understand what is happening here? He's got a paper now. That paper says Shah owes him money. Shah owes him money because he's given the money to him. Shah owes him money. Now this promissory note is a piece of paper. Okay, in which name of Qasim Ali is mentioned. He rolls it up on a nice thick parchment paper, they write it. He rolls it up, puts it in a waterproof skin, and he ties it in his belly, and he goes all the way to Oman. Once the minute he goes there, he takes this promissory note and goes to the Shah there in Oman. Or better still, let us say that the Shah in Surat, instead of giving a promissory note, says, hey, no need for payment and all. I will draw a bill of exchange on that Shah. So I have another Shah there who is my friend in Muscat, our trading partner. So he takes a piece of paper and directs the Shah in Oman to pay 10,000 rupees, big amount in those days, to Qasim Ali at site. Or, are you able to understand? Or 10 days from site. Chalo. Now, fellow goes there and Oman, he's got a piece of paper, direction from Hemant Shah, Surat, directing his Shah in Oman to pay money, 10,000 rupees. So our man goes there, goes to the marketplace. Understand what I'm saying? He goes to the marketplace and he doesn't go to the Shah at all because this piece of paper is so valuable. He goes to the first merchant he meets and he shows that to him. And they say, Hemant Shah has given this note drawn on this fellow. Oh, yeah, I know this guy. He's a famous guy. And he says, so what do you want? No, I want these goods. You pack them up and send them to the ship. In the meantime, you give me 5,000 rupees and goods worth 5,000. Beautiful. Now I got 5,000 rupees to spend in Oman for other purchases. 5,000 rupees worth of goods. Now the paper, this bill of exchange, this hundi is now in the hand of the local merchant. Now that local merchant also doesn't need money. What he does, he goes to the Shah and shows the paper to him. That is called presentment for acceptance. Shah looks at it and says, yeah, Hemant Shah, we know. Immediately he makes an entry in the ledger, accepts it and gives it back. No money is paid at this point in time. But once this guy accepts it, in Oman, it will start circulating. Are you able to understand? Finally, it will come back and it will be presented to the Shah, who will in turn pay it. Whoever presents it in Muscat will get that money. That paper will be retired. Then between the two Shahs, Surat and Muscat, they will adjust the accounts. No money will be sent. Money is given and spent in Oman, but due is to the Surat guy. Are you able to understand? It's a beautiful system by which, without money, almost this was the old banking system. In those days, all this presentment for acceptance, etc. made sense. Today, it does not. Today, this whole system is archaic. Why I'm even giving this background to help you understand this whole concept. That is why Institute has said no need for acceptance in your syllabus. Okay, so that is the point. But bill of exchange has to be accepted. Whether you like it or not, it has to be accepted. Only one small difference between holder in due course. What is that? If you see it, you will understand. Holder is the possessor, whose name is mentioned as endorsee or payee or bearer. Simple. But holder in due course should prove that he got it for consideration before it became matured, before it became payable, and he took it in good faith, which there is the crux of the difference between holder in due course. If you don't understand it, you will never understand it. Basic difference is holder in due course gets the instrument without any knowledge of defect in title. Holder will get it with the defect, whereas the holder in due course who takes it in good faith will get it free of defect. This is the basic difference. If you understand it, it will be great. If you still don't understand, we'll see how we can make you understand. Correct. The holder in due course is innocent. He gets it in, innocent is a big word. He acted in good faith. He is not aware or he has not got sufficient cause to believe. His suspicions have not been aroused that there is any defect in title. We studied good faith now in General Classes Act. You have to also exercise your common sense. Okay. Pranay Vasishta ji, for though check is a bill of exchange, there is no requirement for acceptance. Kyun? Because the drawee is a bank where you are having money or you are having facility. Why he will accept it every time? So, listen to me, Pranay. No need for acceptance for check. Samajh? No need for acceptance for check, though it is a bill of exchange. Got it? So, for holder in due course, there is some defect in title, but he does not know it and takes it in good faith. Correct, madam. Where there is a defect in title, A holder who takes it in good faith is a holder in due course. Like that, you have to understand. So this whole issue will come only when there is any defect in title. Then we'll have to find out, are you a holder or holder in due course? Because if you are a holder in due course, the way I treat you will be totally different. You will have a privilege that the holder will not have. That's also. Suppose an instrument is negotiated to a holder in due course. The other parties to the instrument cannot escape liability on the grounds that the instrument was delivered conditionally or for special purpose. For example, A might not have given money to B. He might have taken a promissory note as a collateral security for something else. But that promissory note gets negotiated or endorsed. Then the holder in due course will get it for consideration before all that blah, blah, without knowledge that there was a thing. Nobody can refuse to say, you pay him first. When he presents the promissory note, pay him. Then all this, he didn't pay money to me and all, only between the maker and the payee. As far as the holder in due course is concerned, he will have to be paid. For example, the maker of a promissory note is writing a promissory note and giving it. At that time, no money was given to him. It is given as a collateral for some other transaction, which is going on between them. No money has been given. No real money has been given for this transaction. It is given as a security. Between the two, that understanding. So the payee is not a holder in due course. Why? Because he knows of that matter now. So he cannot say, I'm taking it in good faith without knowledge and all. Whereas, if that promissory note is endorsed to a third party who pays consideration and takes it in good faith, that will be a holder in due course. Yeah, so no party to an instrument can escape liability from a holder in due course. When a holder in due course presents it, it has to be paid. So here we see the diagram for the fictitious name. See what has happened. X is a dryer. He has sent it to the acceptor. He has drawn it on a fictitious name. There is a payee, his name is fictitious. That is then delivered by X to M as signing as Z. But X is only signing it. Subsequently, M presents it to Y for payment. Y cannot say no, provided M is a holder in due course. X is drawing a bill to himself. He is the payee. It's in a fictitious name. Y knows it and he accepts it. Then X, who is now Z, signs in his own hand, but not his signature, Z signature, but handwriting is X, and gives it to M. M takes it in good faith, blah, 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 holder in due course, goes to Y. Y cannot at that time say, hey, Z is not a real name, it's a fictitious name, I won't give. Pay's name is fictitious. He cannot say that because M is a holder in due course. Okay. Beautiful. A holder of, see, whenever you have a problem in negotiable instrument, especially holder in due course, create this diagram or some similar diagram and try to put the names in the exact place and then work out the problem. I have found that when I draw diagrams, my thinking is made better. My humble view, I'm sure you have a different view, but my view is that diagrams simplify thought. In your case, where drawer and payee are holders and endorse, don't bring the drawer into it. Drawer is not a holder. Drawer is a dryer. The payee is the first holder. He can also be a holder in due course. Because if there is no defect, he is a holder in due course also. For consideration, before he is a holder in due course. Thereafter, everybody can become holder or holder in due course. Okay. So drawer is not a holder. Clarify that point, Mr. Alok. Payee is a holder and endorsee holder in due course. In case of default in payment to endorsee, drawer and payee are. Though drawer is not a holder, he is liable to the endorsee. See, otherwise also in this diagram bars, the minute the bill of exchange is dishonored for payment, everybody in this chain is liable to this guy. Everybody in this two chain, the drawer and payee are liable to endorsee 1. Drawer, payee, and endorsee 1 are liable to endorsee 2. It's a chain. Okay. Drawer and payee both will be liable. Both will be liable. Drawer is a primary liability. You know, I will tell you another way. You have studied contract act and now you are authority in guarantees. In a guarantee, there are three parties: the principal debtor, principal creditor, and surety. Now, in this diagram, think about it. The drawee who accepts it becomes the principal debtor. The drawee who accepts it, normally drawee will not be. The minute he accepts it, he becomes principal debtor. The payee becomes the principal creditor. The drawer is the surety. If you think carefully, you will understand it. The drawee is the principal debtor. The payee is the principal creditor. The drawer is the surety. There is an implied contract of guarantee in every bill of exchange. There is an implied contract of guarantee. Subsequent endorsees also become principal creditors. Finally, whenever there is an endorsement, the endorsee becomes a principal debtor. And the endorsee becomes a surety for his next in line. So there is a series of sureties are created. Drawer becomes a surety for this guy, and this guy, and this guy. Payee becomes surety for this guy and this guy. Endorsee 1 is a surety for this guy. All of them are giving a guarantee in respect of the amount to be paid by the acceptor drawee. In case the acceptor drawee fails to pay, dishonors, then all these sureties are liable, which means endorsee 2 can go to all these three guys and say, give co-sureties. These three will become co-sureties. Endorsee 1 can go to these two co-sureties. Payee will go to drawer as a surety. If you understand this principle, no, this whole thing will fall in place. All of you are able to understand? It's a very interesting point. There is an implied contract of guarantee in every bill of exchange. I told you the relationship also. If you have a piece of paper, copy this down and write drawee, acceptor, principal debtor, payee, endorser, principal creditor 1, principal creditor 2, principal creditor 3. And payee will become again surety 2. Endorsee 1 will become surety 3. This fellow will never become a surety because he has not endorsed it. Drawer becomes the first surety. Write it down, you will get a lot of clarity. Okay. Friends, negotiable instrument tax, if you read it from a book, you go mad. Whether institute material or textbook, wherever. Believe me, it has to be taught by my guru, Professor K. Santraman. He should come and teach you. I am imperfect in the way I teach. What I'm teaching is nothing when compared to what my guru can come and teach. Whatever little he taught, whatever little went into his stupid brain, that is only I'm trying to share with you. Okay? That clarity is more important. My guru will give that type of clarity. Okay? So suppose a bill of exchange is drawn on a fictitious name and payable. I've already done this. A holder of a negotiable instrument who derives title from a holder in due course has the rights on the instrument as that of the holder in due course. Simple. Once an instrument passes through a holder in due course, it gets cleaned. The holder in due course becomes some kind of a Ganga. When an instrument goes through his hand, thereafter subsequent guys who get it in good faith. Friends, be careful. The subsequent guy should get it in good faith. Only then he'll be a holder in due course. Okay. So once it passes through a holder in due course, then any people deriving title from him will have the same rights as that of the holder in due course. In our diagram, payee got it by fraud, but he gives it to endorsee 1 who got it in good faith, holder in due course. Endorsee 2 automatically gets the same right as holder in due course because the instrument has passed through the hands of a holder in due course. It eliminates all the defects. That's why we say a holder in due course cleans the instrument. Okay. The holder who receives it from a holder in due course takes it free of all defects. The holder may have knowledge of defect, but he should not be a party to them. That is, he may have knowledge, but once he gets it from a holder in due course, he gets the instrument is cleaned, but the holder should not be a party. For example, if endorsee 2, little complicated, just don't get worried. Listen to me. Payee has practiced fraud. Endorsee 1 doesn't know about it. He gives it to him. Endorsee 1 is holder in due course. He passes it to endorsee 2 now. NRC2 is aware of the defect in title, but he is not party to it. He is not a co-fraud here. But he is aware that this guy practiced fraud. Now be careful. NRC1 is holder in due course. He cleans the instrument and gives it to NRC2. Now NRC2, in this example, he is having knowledge of the defect. Is he a holder in due course? No. He gets his title from a holder in due course, therefore enjoys the rights of a holder in due course. So when he presents it to the drawee, he gets the full title. And if in case the drawee accept or dishonors, he can go back to all these guys in the chain right up to the drawer. Drawer cannot say, I gave this check under fraud. That is between you and the payee. Go fight a case against him. I am a holder in due course. Like that, NRC2 can argue. But NRC2, is he a holder in due course? Let's see if we can answer this question. NRC2, in our example, knew about the defect, but he is not a party to the defect. He is not a party to the defect, but he knew about it. He has knowledge. So NRC2, in this example, is he a holder in due course? He is only a holder. Beautifully said. I think Srishti Buttada is almost becoming an expert in negotiable instruments. Great, madam. In your example, can NRC2 file suit against right royally? Holder, see, once there is a dishonor, I told you now, all parties become sureties now. So NRC2 can fight right from NRC1 right up to dry when there's a dishonor. But NRC2 is not a holder. He is not a holder in due course. So if he subsequently endorses it, people who get through him have to again show that they are holder in due course, in good faith, etc., etc. Automatically, they cannot get the rights of a holder in due course. Because in between NRC2 with knowledge of the defect ceases to be a holder in due course. So he cannot further clean the instrument and send. But in his hands, the instrument is clean. And he can claim and get the same right as a holder in due course. Absolutely correct. I think now you have clearly understood who is a holder and who is a holder in due course. Beautiful. When a negotiable instrument has been lost or has been obtained from any maker or holder by means of an offense or fraud, a possessor of an endorsee or an endorsee who claims through the person who found or so obtained the instrument is not entitled to receive the amount from such maker, acceptor, or anything. However, a possessor or an endorsee who is a holder in due course is entitled. I've already explained 58 to you now. I've already explained 58 to you. In our example, the payee is a fraud. He obtained by fraud. NRC1 is a holder in due course. NRC2 holder in due course. They are entitled to claim. Section, if you ask me catch me by the collar and ask, where is the legal support for your statement? Here it is, 58. Okay, 58. It shall be presumed that the holder is a holder in due course. We saw that. This presumption is until the contrary is proved. So, even the payee who got it by fraud shall be presumed to be a holder in due course. But the drawer will prove that you don't come, man, because you practice fraud. You are not a holder in due course. Like that. Okay. Of course, the beauty is, in my example, that payee will not be available for a finding. He'll be running away with all the money. NRC2 is holder, not holder in due course. But if you transfer it to the payee, then he is not entitled to any privilege. Transfer it to payee. Payee. Why payee? Payee is gone. Yeah, run away. Fellow practice fraud took the money from NRC1 and ran away. That's all. Got it? He got a check from NRC, from drawer, by fraud, gave it to NRC1, took 10 lakhs, ran away. You can't catch him. Okay, so where payee comes in, I'm unable to understand. Like if the person has taken BOE from holder in which the title is defective, don't say defected, defective, he will not become holder in due course, provided he has not acted in EO. Why are you convoluting the sentence like anything? Keep it simple, sir. You are getting the instrument from a holder, okay, who has no knowledge of defect. He gives it to you. He is a holder in due course. You are a holder in due course. He has knowledge of defect, then he is not a holder in due course. but you get it without knowledge of defect, you are a holder in due course. That's all. Keep it simple and clear. Your sentence is unnecessarily complicated. No need to complicate sentences like this. Where a suit has been filed by a holder in due course on a promissory note or bill of exchange, the maker of the note or the acceptor of the bill payable to order shall not be permitted to deny the payee's capacity to endorse the same at the date of the note or the bill. They are stopped from denying the capacity of the payee to endorse the same. Please understand, this guy, the payee, we have to keep going back like this. Payee got it by fraud, but his right to endorse cannot be questioned. You know why they protect the holder in due course and all this? Because that piece of paper needs to be trusted. See, any financial market works only when the instruments are trusted. The minute trust in the instrument is gone, then nobody will accept it. Thereafter, the whole facade crumbles. See, even the cash that I'm holding, it has value only because I have belief in the Reserve Bank of India. If the trust is not there, gone. Therefore, if 5% 500 to the bank will accept it unless it's a counterfeit note. Okay. They will accept it. Even a counterfeit note, when it comes from me, they will ask me, where did you get it? I will say, I got it in the shop. That's all. I become a holder in due course. I may have got it in good faith. I didn't know that it's counterfeit. How do I know all this? I can't check for counterfeit note. So the bank can maximum make note of it and ask me where I got it and give me credit my account with 500. They cannot say it's a counterfeit note because that's not my problem. Like that you can argue. Okay, what I'm trying to tell you here is, when a holder in due course gets possession of an instrument, he cleans the document and the system works. So if the drawer can question the right of the payee to endorse, then the whole system will collapse. Therefore, they say, don't question right to endorse. When an endorsee is a holder in due course, pay him, settle him. Then we will have our fight. There will be a fight between drawer and payee, that you file a suit on the payee for fraud, 420, claim compensation. That is between you and him. But as far as endorsees are concerned, pay, settle. In case the drawer does not settle, drawer has to settle. Endorsee 1 and endorsee 2. There is no argument there. Because the minute you deny liability, trust in the system will be destroyed. And that cannot be allowed. Okay? Where a suit has been filed by a holder in due course on a negotiable instrument, the maker or acceptor for honor shall not be permitted to deny the validity of the instrument as originally made. Okay? You cannot say this instrument was not correct and all that. Okay? Like that, there are many privileges to a holder in due course. So what are the essentials? Valuable consideration, before maturity, in good faith, without knowledge of the defect. Okay. So this is holder in due course. Little difficult to wrap your mind, but once more I will show you my diagram, or rather the diagram. Kindly keep this diagram as some kind of a mental picture with you. It may help you to resolve. Put the situation into this diagram. You may find some solution emerging. Sir, what about in case of not negotiable cross-check? Madam, we saw not negotiable cross-check. Do you remember? There I said I will tell you. I think you are authority on not negotiable crossing. See, a person taking a check crossed generally or specially, bearing in either case the word not negotiable, shall not have and shall not be capable of giving a better title to the check than that which the person from whom he took it after had. This is one exception to the general rule. Normally, holder in due course will get it free of title. But if it is not negotiable crossing, exception. Once it is not negotiably crossed, by putting a not negotiable crossing, the drawer or of the check or the payee is protecting themselves from holder in due course. Got it? So that is why the not negotiable crossing is there. Normally, nobody will accept not negotiable crossing. That is why, though it is there in the textbook, in the act, etc., 100%, if somebody gives me a not negotiable crossing check, I will throw the paper at his face and say, give me a normal check. Either give me an account pay check or even a generally cross check. So when the not negotiable value like that I will tell. Okay. So though this not negotiable is there, rarely it is used in business. Okay. But the effect of it is exception to the general rule of holder in due course gets it free of defect. Exception. Good question. Good question. I hope you got the answer. Correct. Okay. So moving on. HDC means holder in due course. Okay. Now we go on to quickly talk about something called inland instrument and foreign instrument. Means a promissory note, bill of exchange or check drawn or made in India and made payable in or drawn upon a person resident in India is an inland instrument. Everything is in India. It is drawn in India or made in India and made payable in or drawn upon any person resident in India. All are Indians. Foreign instrument. Bill drawn outside India on a person resident in or outside India and made payable in India. One example. Bill is drawn outside India on a person resident in or outside India and made payable in India. I gave a classic example now. Suppose the Muscat gentleman draws the bill and gives it to a guy in Muscat, but the bill is drawn on a person in India and is payable in India. It's a foreign instrument. Suppose the Muscat Shah draws a bill on Hemant Shah in Surat. So it is drawn on a person in India, outside India. He is drawing it in Muscat. He is giving it to another guy in Muscat and says, hey, go. When you go to Surat and you want to buy textiles, go there, meet Hemant Shah, present it, he will accept it, and thereafter you do whatever you want. He does it. It's drawn on a person in India, payable in India, drawn outside India. Okay. Drawn outside India on a person residing outside India, payable in India or outside India, then it is a foreign instrument. Okay, straight away. Made payable in or drawn upon any person resident in India. Only then. See, there should be some connection. Are you able to understand? Then it is a foreign instrument. Just example, don't get too much worried about it and go mad. Demand instruments. Checks are always payable on demand. You cannot have an outside check because there is no question of acceptance. Yeah. You understand? Whereas a bill of exchange, a bill or promissory note is also payable on demand when it is expressed to be payable on demand or at sight or presentment. The minute you use the word on demand, I promise to pay the bearer, or on demand, I promise to pay S. Srikanth or order a sum of rupees 1 lakh. On demand, that means I simply have to come to your office, present it, you have to pay me. At sight also has the same meaning as on demand or on presentment. Means once presented, you have to give it. That's all. Okay. Demand instrument. Time instrument. It's an after sight. A bill or note which is payable after a fixed period. So when I give a promissory note says, I don't use the word on demand. I say, I promise to pay S. Srikanth a sum of rupees 1 lakh on 30th of April 2023. It is payable after a fixed period. Or normally promissory note will not be after sight because there is no need for acceptance. Please understand why promissory note cannot be after sight, because there is no acceptance. Whereas bill of exchange can be after sight. Sight means what? Qasim Ali goes all the way to Oman. He doesn't go to the shops. He doesn't go to the mandi. He goes directly to the Oman Sheikh or Oman Shah and he shows it. That's called sight, presents it. Okay. Then Hemant Shah has said 90 days after sight. So immediately he will sign it, accept it. That means the bill gets value and it will be paid 90 days after sight. Okay. 1 second. Appa, idhe inga vekkira library la vi edhukku inga kondu vara? Illa library vekkano ade. Please. Sorry. So where a bill or note which is payable after a fixed period or after sight or on a specified day or on the happening of an event which is certain to happen. Are you able to understand? On the happening of an event which is certain to happen. Purnima day, certain to happen. Full moon day will definitely happen. Nothing will happen to the moon. Suddenly it won't stop. Okay, like that. So a date is fixed. So on demand it won't. So once it is presented, from that day, 90 days after sight. Sight is, now you understand sight. When the Oman Sheikh sees it, sight. He signs it immediately. From that day, 90 days. Now with that bill, our friend will go around running in the market buying. Everybody will take that bill because they know that the minute I get this paper, I can keep it safely. 90 days later, Oman fellow will pay me. Or 30 days later, Oman fellow will pay. Okay. See, my dear friends, why all these things are there? Because for convenience of trade. So please understand it in that context and not in a bookish way. Unless there is a commercial need, Summa, I will not go around in time instrument. But some commercial need will be there for time instrument. I'll write it, right? See, as a holder means he should be either, okay, I'll explain Srishti. Though we are in time instrument, I'll go back to holder. Who is a holder? He is a person who should be either the payee or the endorsee of a bill or a note payable to order, check payable to order. Or he should be the bearer of a bearer check. He is a holder. So, a holder in due course should first of all be a holder. Got it? He must have received the instrument as a holder. Without being a holder, how we become holder in due course? Are you able to understand? I should be a payee or an endorsee or a bearer. Only then I'll become holder. Then, for consideration, before maturity, etc., in good faith, holder in due course. I will give another example. I have no father. Before that, I should become husband. Na? So how I will become holder in due course? Unless I become holder, first to holder, then only holder. I mean, I'm just trying to give an example. Don't mistake. Which came first? Father or son? Anybody can answer this question. Which came first? Father or son? Or who came first? Father or son? I have a son who is now 25 years old. Who came first? Me or my son? Father or son? Any answers? Again, I'm only testing your common sense, which is more important than mugging up knowledge. Of course, memory is needed, remembering is needed, but not mugging up and vomiting blindly without understanding. So, which came first? Father, obviously. Father. Sir, think about it. When my son was born, early morning, 5 a.m. My brother-in-law calls me and says, you have become father. Who came first? Son or father? Son came first. Then I become father. Yeah, almost simultaneously, you can say. The minute son was born, I become father. But of course, I come to know about it only afterwards. Brother-in-law calls me and says, congratulations, you have become a father. When I become father, only when son is born. So son comes first, only then father. I mean, friends, the idea is not to irritate you, but to make you understand that many things in life are commonsensical and not mug up and vomit. Okay? Everything, all the knowledge in the world is not in Google. All the knowledge in the world is not in books. Okay? Here, Ch-2 is not God. Google is not God. We created it. We can think better than those in dumb computers. Okay? We are original. They are only copy. Don't ever forget that. They are actually artificial intelligence. I am a natural intelligence. You are a natural intelligence. They are after all serve artificial intelligence. Don't give them too much importance. Okay. Coming back to the topic. Ma Aslam the first. I don't know what he's trying to say. Yeah, mother comes first. Yeah, no doubt about it. Without mother, where all this? Okay. In a promissory note or bill of exchange, the expressions at sight and on presentment means on demand. At sight, on, I told you now. Similarly, after sight means after presentment for sight. And in a bill of exchange, after acceptance, etc. Okay, that acceptance also becomes important. But in your syllabus, acceptance is not there. The maturity of a note or bill is the date on which it falls due. The maturity of a date. But you have 3 days grace. Now you understand. That's why I said when I spoke about maturity, I said, don't rush. I fell at your feet and requested you. I will teach you days of grace. So when I counted the days, immediately don't come and catch my throat. Wait. The maturity of your note or bill is the date on which it falls due. So 30 days after sight means it will fall due on the 30th day. From General Clauses Act, you know, the date from date should not be taken. Next day you count 30 days. Then you have 3 days. A note or bill which is not expressed to be payable on demand, at sight, or on presentment is at maturity on the 3rd day after the day on which it is expressed to be payable. So, if you count the days and you get, say, 30th of April, then 30th of April is the day on which it is expressed to be payable. Then 1 May, 1st, 2nd May, 3rd May. It will become due on the 3rd of May. You got, you will be given 3 days of grace. The reason is to give that person some time to collect the money and give it. Suddenly, if you come and push it in front of him and say, give me money, he can't, give me some time. So 3 days is given. This is, again, you might ask me, where is this rule? This was discovered by Mansfield as a practice among merchants in the Gulf, in the Arabian Sea, in the coast of the Arabian Sea, the Konkan and Malabar coast, and the Gulf of Persia and all. He found that these merchants naturally gave 3 days grace. It was the custom or usage. So he made it a law. He introduced it as a part of his law. Okay. Very, very important. Very, very important. Concentrate. Don't ask doubt before understanding. Let's understand and then ask doubt on this topic. Who has decided 3 graces? I told you now, people in the merchants have decided across the Persian Gulf, right? Oman, Muscat, Muscat is in Oman, Dubai, Salalah, everywhere. And India, in Surat, in Mumbai, okay, they decided in Karachi, okay, they decided. India was part of Karachi was part of India, don't forget that. It was part of the original undivided India, right? In Kochi, everywhere the merchants decided, okay, Jewish merchants, Parsis, Islamic merchants, Gujaratis, Marwadis, everybody together, they decided, Sindhis, they decided, and whatever they decided and made it a custom or usage, our friend Lord Mansfield made it the law. Okay. Grace days are available for at sight. Was at sight? No. Please note what it says. On demand means you present it, you take it. If it is expressed to be payable on demand, at sight, or on presentment, no grace date. Not expressed to be payable, then maturity on the 3rd day. May 3 is accounts exam, according to my friend Aslam. He's so tied up about the exam. He's so tensed about the exam. That is how it should be. He should be like a tightly drawn arrow, so that once the exam is over, the arrow will be released. He will hit the target and he'll be calm. So now come to this point. In calculating the date at which a promissory note or bill of exchange made payable at certain number of days after date or after sight or after certain event is at maturity, the day of the date or presentment for acceptance or sight, etc., shall be excluded. Simple, ma'am. Let us say that 30 days after sight. 30 days after sight. Okay. Now, you present it to me today, 31st of. So sight is today, 31st. So the day of the date or of presentment or acceptance of sight or sight, etc., or of protest for non-acceptance shall be excluded. So you will exclude 31st of March. You come to my office and present the bill today. It is payable 30 days after sight. I look at it, sight over, 31st March excluded, count 30 days. 1, 2, 3, 4, 30th. 30, that is April 30th. Okay. Then 3 days. 1, 2, 3. 3rd May due. This is how you have to calculate it. I hope you are clear. If you have doubts, you ask me. I tell you. When the day on which a promissory note or bill of exchange is at maturity is a public holiday, the instrument shall be deemed to be due on the next next thing should be succeeding. Next preceding business day. Okay. Which is coming after that. Today is a public holiday, you present it tomorrow. That is why public holidays are notified under the Negotiable Instruments Act. Public holidays are notified under the Negotiable Instruments Act. So once it is notified as under public holiday, the maturity falls, the 3rd grace day falls on that day, then next day. So we now move away from the concept of holder in due course, etc., etc. We move to negotiation. In fact, this law itself is called Negotiable Instruments Act. Correct? So the concept of negotiation is at the central core of this law. Negotiation is a process by which the instrument is transferred. So you can use the word transfer, you can use the word negotiation, you can also use the word endorse. That's also a method of transfer. So modes of negotiation. Where an instrument is payable to bearer, it is negotiated by delivery. Actual or constructive. Actual means you actually give it to the person. For example, where it is payable to bearer, only one instrument can be payable to bearer. Only one instrument in India can be payable to bearer. Which is that? Only one instrument can be made payable to bearer. Which is that? Of the 3, only one can be payable to bearer. Which is that? And that instrument will be transferred or negotiated by mere delivery. Could be actual or constructive. After sight means, after cert, sight is when I see the instrument and I accept it, sir. From that date, I am having a certain number of days. After that date. So I told you now, I am getting the instrument today. That is payable 30 days after sight. What does that mean? I have to pay it. If I accept it, I have to pay it within on the 30th day from the time it comes to my sight. Which is why my example of Muscat Oman only you will understand it. Normally, this is not a big deal. Or suppose A Limited is selling goods to B Limited. Then A Limited raises the invoice. Along with the invoice, they send a hundi or a bill of exchange payable 90 days after sight. Now that instrument comes to B Limited. The B Limited financial controller is the signing authority as per board resolution. He sees that instrument, signs it. From that day, B Limited has to pay within 90 days. How to count 90 days? That day you should not count. Count from the next day. Count 90 days. Then count 1, 2, 3. On that day, it is due. Are you able to understand? Before midnight that day, you have to pay. Otherwise, it is dishonor. I can't explain this better than this, Vedant ji. Kindly confirm that you have understood. Yes. Only check can be made payable to bearer. Promissory note cannot be made payable to bearer. We studied it yesterday, Suprada. Okay. Promissory note prohibited, RBI Act. I show it is there. Later on, when I send this PowerPoint, you will read it. Promissory note cannot be made payable to bearer. Check only can be made payable to bearer, nothing else. Okay. Vedantora, have you understood what is after sight? Got it? Thank you, ma. Once you see, you know what happens now? If it's a physical class, I can see all your faces. And I am a person, I am an NLP master. So I can, by seeing the face itself, I'll know whether that person is understood or not. Many times, my students in my physical classes used to shake their head, but I won't believe. I'll come to, but you did not. Out of 60 students in my class, I'll go to one of them and say, hey, I know you have not understood it. Tell the truth. Yes, sir, I have not understood. I'll again explain. That is the role of a teacher. Okay. But I will know once he has understood it. But in this mode, I cannot see your face. So you have to confirm that you have understood it. Then I'll feel happy. That's it. Okay, where instrument is payable to order. Simple. It will be endorsed and delivered. How? The instrument is payable to order. I am the payee. Srikanth, pay Srikanth a sum of rupees 1 lakh. I am the payee. Now I have to negotiate it. What should I do? I should turn the instrument around on the reverse side. See, never say backside. Only in India we say backside. Backside has a different meaning. It is an anatomical meaning. You check out in the dictionary, you will understand what is backside. So never say, sir, please write on the backside of the paper, sir, like that. Always use the word reverse side. Always use the word reverse side. So you take that instrument and on the reverse side, you suppose I'm endorsing it to Abdul. Then I will write pay Abdul. Then my signature. Then Abdul will again endorse. Pay Pranav. Sign. It will keep on getting endorsed. Every time we endorse it, the physical delivery also should be given. Delivery may be actual or constructive. What is constructive? Instead of giving it to you, I give it to your agent. That is constructive delivery. Deemed delivery. If I give it to you personally, it's actual. If I give it to your legally appointed agent as an agency, then even though I have not given it to you, it amounts to delivery. Suppose I have given it to an employee, it is constructive delivery because your employee is your agent by default. Okay. Deemed agent. So I will, if I give it to your employee, that's all. As good as my job over. The above rules are subject to 58. That is where an instrument is obtained by unlawful means or by unlawful consideration. Please understand. Okay. So in those cases, you know, endorsement cannot make you escape liability. Are you able to understand what I'm saying? Once I have endorsed and delivered, I have satisfied the debt. But if you have obtained it by fraud, no. Only a holder in due course gets it clean. Holder who is aware of the defect or party to the defect, sorry. Delivery of an instrument is essential where the instrument is payable to bearer or order for effecting the negotiation. Delivery means physical delivery. Delivery must be voluntary and the object of the delivery should be to pass the property. The delivery can be actual or constructive. I explained to you. Actual means to you physically. Constructive means I give it to your agent or a clerk or a servant. Servant means employee of the endorsee on his behalf. Okay. Or when the endorser after endorsement holds the instrument as an agent of the endorsee. Boss, I am the payee. I endorse it in your favor. Then you tell me, Srikanth, from now on you are my agent. Hold it for me. Now I'm holding it as an agent for you. That means constructive delivery over. Very funny now. I am the payee. I endorse it in your favor. Keep it with me, but I have delivered it to you constructively. Because now I'm not holding it in my name or as for me as payee, but as agent of the endorsee. Law is funny. Okay. But once you understand the law, there is no lack of clarity. It is funny. It is, shall we say, sometimes paradoxical, but clarity need not be. I am the payee. I endorsed it to you. Physical possession is still with me. You tell me. You appoint me as your agent. And you say, Srikanth, hold it for me. I hold it. Now I'm not holding it as myself, but as your agent. Therefore, constructive delivery done. So Srikanth, right hand gives to left hand. Right hand payee hand, left hand agent of the endorsee. Done. Keep it safely. Constructive delivery over. Okay. Anna, Amma, Taye, Solra Punjukoma, RBI Act has clearly said that even though the definition of promissory note says bearer, you cannot issue bearer. It was taught yesterday. Again, I cannot teach you. It's there in the Board of Studies material also. Check it. Totally agreed. The definition uses the word bearer. But Reserve Bank of India is superior. They have given a rule. I mentioned that section also in my class. You won't believe me. I'll go there and show you. Sorry, I use Tamil, but don't mistake me. But somewhere I'm getting a little worried. Are you concentrating or only concentrating on asking questions? Wait. Are you able to see, madam? A promissory note cannot be made payable to bearer, section 31 of the RBI Act. Even though, as you rightly point out, definition of promissory note has bearer. Okay. Are you happy now, Subrata ji? See, you have made me push so much back. I have to come more forward. No problem. For you, because there might be other people also getting confused. So better that confusion is clarified. So we've seen constructive delivery. Endorsement. Okay, endorsement or endorsement, both are same. Some places I will use endorsement, some places I will use endorsement. You ask me which is correct. If you are in America, endorsement. If you are in England, endorsement. I used to be in England, but now I'm slightly irritated. I say endorsement or endorsement. So long as you have understood what it is, it's good. That's all. Okay, you catch me by the collar and say, Shri can't tell. Should I write endorsement or endorsement? Between the two, endorsement is correct because British spelling, older spelling. That's all. Okay. So when the maker or holder of a negotiable instrument signs the same, otherwise than as such maker, for the purpose of negotiation on the back or face thereof, or on a slip of paper annexed thereto, called allonge. You remember yesterday somebody asked me, in case there is no space, what will I do? You can attach another paper, annex the paper. How? Yeah. Put stapler, ayya. Whatever you, or you put a tag, ayya. What can I do, ayya? Why are you asking? How and all I cannot tell, ayya. But you can attach one paper. In that paper, you can continue. That paper is called allonge. Okay. On the back or face thereof. Face generally not a good idea. Because face, if you write something there, it might result in defacing the content or it might result in affecting. So better you don't do that on the face. Face means fronts, or to use your language, front side, back side. I prefer to use the word reverse side. So use the reverse side of the instrument. If that is not sufficient, if it is getting over, take an additional sheet, annex it. It is called allonge. The word used is allonge. Allonge is a French word. You will find that in negotiable instruments, more than Latin, French terms are used. The reason is these similar instruments were there in Europe also. Very surprisingly, again, remember the same Arabian and Moors who traveled all over this side also went to Europe. They went through Spain, then Italy, France. Finally, they came to England. See, the route was they crossed over the straits and then they straight away went to Spain, Portugal, and then France was on the east and Italy. And then slowly they went onwards and reached England. So these customs and usages spread into Italy also. So and France. So you'll find a lot of French words being used. And remember, throughout Europe, the language of commerce was French. It was not English. The language of commerce was French, including in England. See, in England, for a long time, the language that is now called English was not spoken. They spoke an earlier language, which was Norman, which was more French than the English which they now speak, which is Saxon, more Germanic in origin. If you get into the history or of the English language, you'll be very surprised. It's a recent language. The more ancient language was French. So many of the French words became anglicized and we use them now. Okay. Anyway, less of that, more of the word allonge is of French origin. Allonge means anything that is attached, attachment. Allonge is an attachment. Okay. Now, he, the maker or holder, is said to endorse the same and is called the endorser. The endorsement of a negotiable instrument followed by delivery transfers to the endorsee the property therein with the right of further negotiation. Exception 58, where it has been obtained by unlawful means, that gentleman cannot claim. But if he gives it to a holder in due course, the holder in due course gets good title. Sorry to keep on repeating these lessons. If the endorser signs his name only, the endorsement is said to be in blank. That's called endorsement in blank. So what you do, you are the payee, you turn it around on the reverse side, you sign, but you don't put any name. I gave the example of check. Check payable to self. I'm entitled to take the money from the counter of the bank. Instead, what I do, I turn it around, sign, no name. I give it to my employee and say, you go and get the cash and come. It's now a bearer. It's an endorsement in blank, payable to bearer. If the endorser adds a direction to pay the amount mentioned in the instrument or to the order to a specified person, the endorsement is said to be in full. So, endorsement in blank and endorsement in full. Suppose instead I say, endorsing, I say, pay, Mr. Pranav, sign, endorsement in full. And the person specified is the endorsee. Whereas, when it is in blank, the person having the instrument is the bearer. Got it? Now, promissory note cannot be, but of course, one thing, promissory note cannot be made payable to bearer. It has to be paid only to the order. But what happens is I endorse it in blank and give it to you. Now you have the ability to keep it. And finally, if you want to give it to somebody, you give it to him, which means what? Your name will never come in that instrument. Why? Because your name is not mentioned. That fellow, what he will do, he will write his name, Robert, and then he'll take it. So Robert will be there, my sign will be there as the payee. In between, it came through your hand, nobody will know about it. Are you able to understand? Because I gave an endorsement in blank. This will be useful to you in one example. Okay. An endorsement is restrictive when the endorser, while making endorsement, restricts or excludes the right of the endorsee to further transfer the instrument or constitutes the endorsee as an agent to endorse the instrument or to receive its content. So if he says no further endorsement, it is a restrictive endorsement. For example, I endorse the check and cross it account pay and give it to you. That's all. No further endorsement. I am the payee. I endorse it to you. I write your name, but then I cross the check account payee. That's all. It can be paid only into your account and nowhere else. Examples of restrictive endorsements. Pay the contents to C only. Pay C for my use. Means he becomes my agent. Pay C or order for the account of B. He is not receiving it as C. He is getting it for B. The within must be credited to C only. Means nobody else. I gave the example, account payee. Now, these are restrictive. But these endorsements do not exclude the right. Pay C. Nothing wrong. Because C can in turn say pay D. He can endorse. Pay C value in account with the Oriental Bank. No problem. You have to pay it only into his Oriental Bank account. As Abdul rightly said, if somebody else has an account in Oriental Bank, he can endorse it to them. But it should be paid only in an account with the Oriental Bank. Also, pay the contents to C, being part of the consideration in certain deed of assignment executed, blah, blah, blah. It doesn't matter. C can still endorse it. No problem. Okay. Conditional endorsement. An endorser may insert in the endorsement by express words a stipulation negating or limiting his own liability to the holder by such liability or the right of the endorsee to receive the amount due thereon upon the happening of a specified event, although such event may never happen. In any way, if I say I am no longer responsible, that's a conditional endorsement. We also have something called a sans recours. Again, a French word. Sans means without. Recours, as pronounced in French, recourse in English. Sans recours means without recourse. Okay, if it's the English word recourse, you pronounce it recourse. But in French, you pronounce it recours. So, sans recours means without recourse. Sans means without. Okay, means what? Once I give you a sans recours, you take it at your own risk. Whatever happens, don't come to me. Okay. That's all. That's a beautiful endorsement. You can give it like that. And somebody takes it, they take it. They can't come back to you. Okay. Where an endorser by express words abandons some right or increases his liability, it's called facultative. Pay A order, notice of dishonor waived. That's a facultative. So, while endorsing it, I'm saying the final endorsee need not give notice of dishonor. Okay. Straight away. Sans frais means the cost, without cost. Endorser does not want the endorsee or any subsequent holder to incur any expenses on his account The endorsement is sans frais. That means any cost on that will be borne by the endorser. Okay. These are all today not used. These are in the act, but rarely used. Never used. In India, never used. Let's see if any questions are there. If you have any questions, do ask. Abdul, don't play this game with me. Don't question a teacher. Not a good behavior. Don't do it. Okay. And I only ask you not to use the word backside. Don't use the back can be used. Don't use the word backside. Okay. Nothing wrong in using the word back. Back alone has no negative connotation. But don't use the word backside. Again, you know, this attitude of yours, Mr. Abdul, of questioning seniors and elders shows a sign of independence, but also creates an impression that you are a person who has to be watched carefully and not allowed to be free. So any senior with whom you will be employed in future will always be worried about you, so that they will always prefer somebody who is more obedient and friendly rather than you, who keeps on finding fault. This is a quality that you might want to relook at it. Sir, conditional means the endorsement is not totally free. Some condition is there. In some recourse, he says, if there is any dishonor, I am not liable. Condition. Facultative, he says, you paid to him, notice of dishonor is waived. You don't have to give me notice of dishonor. Sans frais, he says, I'm endorsing it, but any cost will be borne by me. These are all conditions. When these are not there, it is unconditional. Okay. You have written back instead of reverse. Okay, so that's how it is. Anyway, it's up to you. If you want to use the word backside, use it. I have no problem. If that is your conclusion from this negative comment you have put here, I have no problem if you use backside. Your language will be not up to date. That's all. See, don't do this, Abdul. When a class is going on in full swing, no, don't irritate the faculty by giving such negative comments. Okay. I cannot slow down, madam. You come fast. I'm going slowly only. Whenever somebody having a doubt, I'm going back and clarifying, going slowly only. Okay. That's all. Topic is over. There's no need for us to go slow. When it's important, I'm going back and I'm teaching. Anyway, very important. It will be a little difficult to understand. So, Prada, I'm going slow. Just listen. If a negotiable instrument, after having been endorsed in blank, is endorsed in full, the amount of it cannot be claimed from the endorser in full except by the person to whom it has been endorsed in full or by one who derives title through such person. Very confusing, na? I will not rush here. Negotiable instrument has been endorsed in blank. What does it mean? Let us say I have a promissory note. I am the payee. I have reversed it. On the reverse side, I have written nothing and I have signed it. What is that called? Endorsement in blank. Subsequently, I give it to you. You take it. You don't do anything. You in turn pass it to Mr. A. A takes it. Now he puts his name, pay A. Then my signature is there. Now it has become endorsed in full. Okay. Now the amount of it cannot be claimed from the endorser in full except by the person to whom it has been endorsed in full or by one who derives title through such person. Diagram is clear. X is the drawer, Y is the acceptor, A is the payee. The payee endorses in blank and delivers it to B. Means what? On the reverse side, he doesn't put any name. He simply signs and gives it to B. So B's name is not mentioned anywhere. Then B endorses in full to C. What he does? He writes C or pays T. Automatically pay C, signed by A, it becomes an endorsement in full. Now C has got it from B. C in turn does not do anything. He merely delivers it to D. D is the bearer. Okay. Now, D as the bearer is entitled to receive payment or to sue drawer, acceptor, or A, who endorsed the bill in blank, but he cannot sue B or C. He cannot claim. That is, after having been endorsed in blank, the amount of it cannot be claimed from the endorsed in full, except by the person to whom it has been endorsed in full, or by one who derives title through such person. D, who is the bearer, is entitled to receive payment or to sue drawer, acceptor, or A, but he cannot sue B or C. If, however, C, instead of passing the bill to D without endorsement, passes it by regular endorsement, then D will derive title through him now. Then D can claim against all parties. Okay. So this is the meaning of this section 55. Abdul, yes, due to a mistake, I have put 49 there. The section is 55. Immediately don't point out the error. I know it. Okay. So I'll wait here. Any doubts are there? You can ask me. This has been asked in the exam also. See, difference between C, the first and the second is where C only gives it to D. He doesn't make D a party. C becomes the bearer. Okay. Now this will not work because bearer instrument cannot be there. But in those days, bearer instrument was there. So payable to bearer, he takes it. But suppose C puts it in full and gives it. Then D can claim against C, B, A, everybody. But for example, C simply signs it and gives it to D. It's not endorsed in full. D is only the bearer. D can claim. If Y dishonors it, then D can claim from everybody, A and the drawer and the acceptor also, because he has accepted it. Okay, but he cannot sue C and B. But if C puts D's name and endorses in full and gives, then D derives title through C. So he can sue B, A, drawer, acceptor, everybody. See, the order of suing will be like this. He can sue, first of all, he will sue the acceptor. If the acceptor is not paying, then he will go to B, C, then C to B, then B to A, then A to drawer. Everybody will be joined. Where an instrument is obtained by unlawful means, okay, the person who, this is 58, where it is obtained by committing an offense like threatening or fraud or unlawful consideration, then the possessor or endorsee who claims through the person is not entitled to receive the amount, okay, except holder in due course. The exception is if the possessor or endorsee is a holder in due course, or some person through whom he claims is a holder thereof in due course, then the exception. Exception to 58 is holder in due course. Okay. Where an instrument has been dishonored and it is obtained, okay, then that person who obtained it has rights only against the other parties, the rights thereon of his transferor. Whatever rights his transferor had, only that right he will have against the other parties, because he is obtaining it after the date of dishonor, which means he will definitely not be a holder in due course. Suppose the guy who got it has a defective title, then the transferor also will have only a defective title. A negotiable instrument may be negotiated except by the maker, drawee, or acceptor after maturity until payment or satisfaction thereof, or by the maker, drawer, not drape, drawer or acceptor at or after maturity, but not after such payment or satisfaction. So negotiation is possible only till the instrument is satisfied. Once it is satisfied, there is no question of endorsement, right? Negotiation back is also known as taking up of a bill or circuitry in action. I see if I have yes, we have a diagram. A diagram will make it clear. An instrument may be negotiated by a subsequent endorsee to a prior party on the negotiable instrument. This is called negotiation back. An instrument may be negotiated by a subsequent. This here is the problem. Endorsee. See, do you notice one thing? See what happens when I put endorsee? Because Microsoft is an American software. So they will not recognize endorsee. They will recognize only endorsee. So if you are an American, endorsee. If you are a British, endorsee. If you want to use British English, then you will get endorsee will be accepted. So an instrument may be negotiated by a subsequent endorsee to a prior party on the negotiable instrument. Then this is called negotiation back. A person who becomes the holder in due course under this negotiation back cannot make any of the intermediate endorsers liable. But where an endorser had excluded his liability, then without recourse or sans recourse, and after that becomes the holder of the instrument in his own right under the negotiation back, all intermediate endorsers are liable to him. Look at it this way. This diagram will make it very easy for you. A is the drawer. C is the payee. Okay. Now, there is a negotiation back. Let us say C endorses it to D. Please understand. A is the drawer. C is the payee. C endorses it. Follow the arrow. Follow the arrow. C endorses it to D. D to E. E to F. Then again, due to some commercial transactions, F is endorsing it back to C. This is called negotiation back. First of all, have you understood what is negotiation back? Where a prior party, where a subsequent endorsee endorses it to a prior party in the instrument. D, E, F is a subsequent endorsee. He is endorsing it to a party, prior party to this instrument, C. So this is a negotiation back. Normally, once C gets it back, all these guys will be relieved in it. Because look at the absurdity of it. In case B, the acceptor, dishonors, okay, let us say that at that point in time, C is holding it. C will sue D. D will sue E. E will sue F. Again, C. This is why it's called circuitry in action. Circuitry in action should not be permitted. Therefore, normal rule is all these guys are out. Now, in my diagram, C again endorses it to X, who is a holder in due course. Now, B dishonors it. So, technically, once there is a circuitry in action, all these guys are cut off. And directly, X can go to C and C to A. These three. All these guys are cut off. But if C, when negotiating to D, made a sans recours, that is, no, don't come back to me. Then, in case of dishonor, D cannot go to C. E cannot go to D. E can go to D, but D cannot go to C. F can come to E. E can go to D, but D cannot go to C because D is a sans recours. Okay, which means F cannot sue. Now F has now endorsed it to C. C is getting it, and he is giving it to X. Now, X can sue C. C will sue D. D will sue E. F will sue, but F cannot sue C because sans recours. You got it? Therefore, C, if it does a sans recours, then the negotiation back will be cancelled. This is what they are saying. When an endorser had excluded his liability by the use of the words sans recours, and after that becomes the holder of the instrument in his own right, under the negotiation back, all intermediate endorsers are liable to him. And in case of dishonor, he can recover the amount from all or any of them. Are you able to understand? C can sue all these buggers, but none of them can sue C. X can, of course, sue C and any of these guys. And A. But in case it is not a sans recours, then D, E, F are released. Okay. This is called circuitry in action. Okay. So there is nothing called regular endorsement and endorsement. They're all only one endorsement, which is the same as endorsement. There's nothing called regular endorsement. I don't want to add, sir. Why are you wasting my time instructing me? I think this attitude needs to be controlled a lot, Abdul and Aslam, okay, of educating other people. I know how to add dictionary. I know what to do. I'm 57 years old and I've been using word from before. Hopefully you are born. Okay. I know what to do. Okay. I know when word came into this world. I was there when word was born. I was practicing chartered accountant with 5 years experience when word was born. Okay. My age is 57. Think about my generation. We saw computers being born. We saw 2 generations of operating systems disappear. We saw languages disappear. We have lived through all that and we are coming today and talking to you. So we know what is what. I'm a certified information systems auditor. Okay, please, Aslam and Abdul, your enthusiasm is good, but behave as students. Okay, here to learn. Ask a doubt, I will answer. Don't keep on educating 57-year-old man. I know what I'm doing. Okay, please don't do this. Not only to me, to any faculty. We are all seniors coming and teaching you. Why we should come and teach you? Think about it, because we want to share knowledge. Take the knowledge if you want. If I need knowledge, I know to whom I have to go and learn. Don't worry about it. I am also learning every day, but I know to whom I have to go and learn. And when I need, I will go and learn. Don't worry about that. Okay. So being the last day, let's not spoil the mood, but don't do this again today's class. You want to learn, learn. If you don't want to learn, don't. But don't educate me. Don't tell me what to do. Okay. This is my humble, not only me, my age group. That's what keep on telling students of your age group. You guys are going to get employed now. Who will be your bosses? Senior bosses, super senior bosses will be my age. You have to deal with them. Remember that. However, young population is going to come in, the oldies are not going to go away. Right from 50 plus to 62, you will find 12 years old. These people are going to be there, like me. Learn about us. Instead of we learning about millennials and all, why should we learn? We have seen life. We have earned so much. We have done so much. You learn from us. You learn about us, about our history. Then try to redo even 50, 30% of what we did, you do in your life. That is enough. Okay. Instead of telling us to, many times, corporates foolishly, they say, Srikanth sir, please tell us about millennials, how to work with millennials. I say, when I was a 21-year-old man, nobody bothered to learn about me. I learned about my seniors. I understood what my seniors were thinking. And that is how I became intelligent. Instead of hoping that, the senior will try to understand me. Why should he? He won't. He's a big shot, yeah. Shankar Datta partner prize what rose. Why should he understand me, 21-year-old chartered accountant? I have to understand him. I have to try to appreciate his knowledge and learn from him. With this attitude, if you come, instead of you have to understand millennials, Mr. Srikanth, why should I understand millennial? When I was a young man, did they try to understand? Later on, another generation came. Did we try to understand? Why only millennials are given this sudden privilege that we should try to learn about them? No need to learn. Okay? They are youngsters. They know. They also have problem. We know who they are. We have gone through that phase. And then only we become 57. I didn't become 57 without being 22. Right? So regular means just a regular, nothing great, sir. Just means endorsement, sir. That's all. Please don't waste. There is nothing called regular and all. If I have used the word regular, I mean normal endorsement in full. There are only 2 types of endorsement. Endorsement in full, endorsement in blank. Okay. Okay. Done. Now we come to the final stage of our topic, which is discharge. Now there are 2 types of discharge. Discharge from liability and discharge of the instrument. Party may be discharged from liability. Instrument itself may be discharged by settlement, payment. Both are possible. But at this point in time, let us have a very small break for 5 minutes. Time now is 7:40. Max 7:48. Okay, we'll come back. Sir, quick break, sir. Nasar ji, quick break. Welcome back from your well-deserved break. And nice. One question is asked by Mr. Parthasarthi, which is good. That is, why only C can he do Sariku, or D can also do? Anybody can do. C. Suppose C does a Sariku endorsement, D gets it now. D in turn to E can do Sariku. In which case, what will happen? F will, when C gets it, if it's a Sariku, then the whole chain will be disturbed. For example, see, once X is getting it now, E can sue C. C can sue F. F can sue E. E cannot sue D. D cannot sue C. D also cannot sue C. But he can sue A, the dryer. So there will be a chain. So X will sue C, which he is entitled to do. CF, FE, E cannot sue D because D is Sariku. D cannot sue C because C is Sariku. But directly E can sue A. So it will continue. Once it is Sariku, the negotiation. But if there is a negotiation back without Sariku, then this whole thing will be cut off. But if there is a Sariku, yes. Here there is a double Sariku. C also cannot be sued, D also cannot be sued. So F can sue E, then E has to directly sue A only. X will sue C, C will sue F, C can sue F because he is a party to the instrument now. He will sue. Then F will sue E, then E cannot sue D because Sariku, D cannot sue C, so E will go directly to A. And D will be escaping totally, C will be escaping totally because his original endorsement was a Sariku. So C can be sued only by X in this chain. None of these guys can sue because Sariku. D also cannot be sued. Only E can be sued and C can sue F. Then E can only sue A. And of course, in all cases, B, the acceptor, will be sued. I hope that this answers your question, Mr. Parthasarthi. So we now come to the final discharge. Discharge can be by cancellation, meaning what? The instrument is not paid. It is cancelled and given. I refuse, I excuse it, or I release you. I say, I don't want the money, man. Here, take it. Go. For some reason, I took the instrument from you. Now you have done what I wanted you to do. So here, take it back. Here's your bond. Take it back. Okay. Finally, of course, it can be discharged by payment. Cancellation. When he cancels the name of a party in the instrument with an intention to discharge him, then such party and all subsequent parties who have a right of recourse against the party whose name is cancelled are discharged from liability to the holder. Very funny. One party is discharged, but the instrument is still live. One party is discharged by cancellation. His name is removed, scratched off. When we come to a problem, you will understand this better. Where the holder of a negotiable instrument releases any party to the instrument by any method other than cancellation, the party so released is discharged from liability. When payment on instrument is made in due course, both the instrument and the parties to it are discharged. This is by payment. Okay. Releasing is where without cancellation, you release them. Okay. You say you are not liable anymore. Discharge from liability by the holder, allowing the drawee of a bill more than 48 hours to accept. Okay. If the holder allows the drawee of a bill more than 48 hours to accept, the drawer is discharged. By the holder agreeing to a qualified or limited acceptance. This is not relevant because acceptance is not there. See, when I present it for acceptance, if it is accepted unconditionally, then no problem. But if it is qualified, okay, and the holder accepts the qualified acceptance, then everybody, drawer, everybody before him is cleared. He will be liable to subsequent parties. But the prior parties are relieved. Only the acceptor, conditional acceptor, the endorsees, subsequent will come. The holder who accepted conditional acceptance or qualified acceptance or limited acceptance will discharge the earlier parties straight away. But that is, since acceptance is not there, don't waste your time on this. By the drawer not duly presenting a check for payment, again not relevant because presenting is not there. By the bill coming to the acceptor's hands after maturity. After maturity, it comes to the acceptor's hands, then discharged. Okay. Discharge by material alteration. Material alteration. That's why I said, do not touch the face of an instrument. Prefer to go to the reverse side. Because if you do anything on the face of the instrument, it could result in a material alteration. See, if check is a simple example. I have made my check payable for 1 lakh. You add one more zero. It's a material alteration. Understand? Any material alteration of negotiable instruments render the same void as against anyone who is a party thereto at the time of making such alteration and does not consent thereto, unless it was made in order to carry out the common intention of the original parties. See, whether it was made for the common intention and all, you should have proof. If one of the parties, intermediary endorsees, they make any material alteration, then it will discharge all the prior parties. Because without my consent, you have done it. I am not liable anymore. Where a material alteration is made by an endorsee, the endorser will be discharged from his liability even in respect of the condition thereof. If the holder of a negotiable instrument makes a material alteration, he loses the right of action against those parties who would otherwise have been liable. The entire chain, go back to my original diagram. Endorsee 2 makes a material alteration. Then endorsee 1 not liable, the payee not liable, drawer not liable. Got it? By material alteration, the identity of the original instrument is destroyed, and those parties who agree to be liable can't be made liable on the new contract contained in the altered instrument. Any alteration is material which alters the business effect of the instrument, if used for any business purpose, causes it to speak a different language in legal effect from which it originally spoke, or which changes the legal identity. Examples: alteration of date, alteration of rate of interest, alteration of sum payable. I gave you an example. 5,000 altered into a bill for 500, or 500 altered to 5,000, whatever. Alteration in the time of payment. Payable 3 months is made payable 1 month, whatever. Alteration of place of payment, etc. Alteration by addition of parties. Alteration by tearing material part of the instrument. Alteration by increasing or affixing stamps. Alteration by erasure of an account payee crossing. See, account payee crossing, it has been erased by using blade and then trying to encash at the counter and all. Alteration of an order check to a bearer check, except by or with the consent of the drawer. So on and so forth. But certain alterations are not material if the alteration is unintentional and due to pure accident. Alteration made by a stranger without the consent of holder. An alteration made to correct a clerical error or mistake. Okay. Suppose instead of 1823, the date entered was 1832. Obviously, it cannot be 1832, so you can make an alteration. Okay. In 1823, if you write 1832, then you can make it 1823. For example, 2023, you put 2032. Obviously, it cannot be payable in 2032. You can change. Again, all these are subject to court. If endorsee 2 is a holder in due course and title is defective and he has made alteration, see, by making the material alteration, you are putting one more complication into this. I don't know what fun you derive out of it. As a holder in due course, the defect will not affect him if he got it without knowledge, right? But if he does any material alteration, then he loses the right to sue prior parties without whose consent he gets it. So it's a double thing. I don't know what benefit you are getting out of this question. There are two alag points. As a holder in due course, he has the right to sue. He has a better title than the guy who gave it to him. One topic over. As a holder in due course, he has made a material alteration. Thereby, he has discharged all the prior parties. Two different topics, two different answers. By putting holder in due course here, what benefit you get, I don't know. It's up to you. There's no big benefit by this fellow becoming a holder in due course. Because he is holder in due course, he doesn't get any benefit by which he can do material alterations. The minute he does a material alteration, he discharges all the other parties. Okay. Thereafter, he cannot say, I am a holder in due course. Because you are right as a holder in due course on the original instrument. You altered it. Now, everybody is released. Okay. The following alterations do not, see, if you think through it, Abdul, you will understand the topic well. And you won't, some of these complicated questions will never arise. But I can answer them. See, by asking me these questions, you are improving my knowledge of negotiable instruments act. That's all I can say. The following alterations do not affect the liability of parties thereto. I told you this, clear. Alteration made to carry out common intention, where the words or order of the name of the payee is inserted subsequently. These are all not material alterations. Where the consent of the parties is given, okay. So basically material alteration, see, fundamental point, any material alteration will discharge the prior parties whose consent was not obtained. That's all. If that one line you put it in your brain, that is enough. Some permitted alterations. If it is an incomplete instrument, a column of sum left blank can be filled. It enables the holder of an instrument endorsed in blank to convert it into full. Where an instrument endorsed in blank is converted into full, it is not an alteration. It is permitted alteration. It's obvious now. The holder of an uncrossed check may cross it. Not a material alteration. Alteration should be apparent on the face of the instrument. Otherwise, it remains a valid security. Should be clear. Okay. Where the holder of a negotiable instrument, without the consent of the endorser, destroys or impairs the endorser's remedy against a prior party, the endorser is discharged from liability to the holder to the same extent as if the instrument had been paid at maturity. You will give this example, you will understand. This example is given in the Act. A is the holder of a bill of exchange made payable to the order of B, okay, which contains the following endorsements in blank. First endorsement B, okay, payable to B, B endorse it, blank. Second endorsement made Peter Williams. Third endorsement Wright and Co. Fourth, John Rosario. Now, John Rosario. Now, this bill A puts in suit against John Rosario and strikes out, without John Rosario's consent, the endorsements by Peter Williams and Wright and Co. A is the current holder. B was the payee. He endorsed it to Peter Williams, Wright and Co., John Rosario. Now, John Rosario, fourth endorsement. A got it from him. A sues John Rosario. But without John Rosario, he strikes out the endorsements by Peter Williams and Wright and Co. Okay. Now, A is not entitled to recover anything from John Rosario. At the time of presenting the suit, bill to suit, he strikes out, without John Rosario's consent, the endorsement by Peter Williams and Wright. So, straight away, Peter Williams and Wright are released, discharged, without John Rosario's consent. Now, if A goes to sue John Rosario, then John Rosario say, go to hell. I had the right against Wright and Co. and Peter Williams. And B, you have destroyed my right. Without the consent of the endorser, he destroys or impairs the endorser's remedy against a prior party. So in my diagram, you put it, you will see. There is a drawer, there is an acceptor. Then payee B, who endorses it to Peter Williams. Peter Williams to Wright and Co. Wright and Co. to John Rosario. John Rosario to A. A is the holder. Now this A sues John Rosario, who is his immediate endorser. But while doing so, this donkey has striked out the name of Peter Williams and Wright and Co. Thereby impairing the endorser's remedy, that is John Rosario's remedy against Peter Williams and Wright and Co. Therefore, the endorser is discharged. Who is the endorser? John Rosario. He is discharged from liability. Now, Suprada, I'm going very slow. If you have any doubt on this, you ask me now. If you are clear, I will push on. I'm giving 2 minutes. We saw this section, given example. This example is given in the Negotiable Instruments Act. See, diagrams are the best way. A is the final holder, John Rosario, Wright and Co., Peter Williams, B. Endorses in full to Peter Williams, Wright and Co., John Rosario. Now A gets it. Now A files a suit against John Rosario. While doing so, he strikes off Wright and Co. and Peter Williams. So straight away, now what happened? John Rosario could have sued these two guys. His right is impaired by A without John Rosario's consent. So John Rosario says, boss, I am discharged. It is as if this bill has been paid. So now what he has to do? He can only sue B, X, am I correct? And Y the acceptor. That's all. Because he himself struck off Peter Williams right now, so he can't sue them also. Only John. John says, get out. Now B, X and Y. That's all. Okay. Discharge of parties and discharge of instrument. Party is discharged where that party ceases to be liable, but the instrument continues to be valid. When the instrument is either cancelled or the instrument is paid, the instrument itself will be discharged. Dishonor, that is where the acceptor does not pay or the drawee does not accept. Don't worry about non-acceptance because acceptance is not there, non-acceptance is not there. Dishonor for non-payment, we'll see. And we'll skip non-acceptance because, see, nothing great, yeah. I'm not trying to skip. It's not in your syllabus. Don't get immediately upset and start crying. Just listen. In this diagram, original diagram, you have to go now. Back to this. See, this fellow presents it for acceptance now to the drawee. At the time, if the drawee says, no, I will not accept it, go to hell, that is called dishonor for non-acceptance. Straight away, this guy has to come and sue the drawer. So, are you able to understand? Where this guy refuses to accept it itself. Any stage, if there is a refusal to accept, it is called dishonor for non-acceptance. The bill then comes back to the drawer and says, what nonsense, pay. So he has to pay. Suppose endorsee one presents it and not accepted, then he will sue the payee and the payee will sue the drawer and everybody will sue each other and go. Everybody will sue and go to hell. Except the drawee, because drawee by non-accepting is no longer a party to that bill. That is called, simple terms, dishonor by non-acceptance. It is a kind of dishonor because we trusted the drawer and we went to the drawee thinking that the drawee will sign and accept it. He has refused to accept it. That is called dishonor by non-acceptance. Right, sir? Rights, once there is a non-acceptance, the right is only against the immediate prior parties. Okay. Drawee is not liable. By not accepting, he has excluded himself from liability. Okay. Dishonor by non-payment. When on the date of presentment for payment, it is not paid. Okay. When the maker of the note, acceptor of the bill, or drawee of the check makes default in payment upon being duly required to pay the same. It is presented for payment. If it is at sight, on seeing it, he has to pay. If it is after sight, within 3 days from the date of maturity, he has to pay. If he does not pay it, it is dishonored. Again, a negotiable instrument is dishonored by non-payment when presentment for payment is excused and the instrument when overdue remains unpaid. There is no need for presenting for payment. On the due date, it is overdue and is not paid. When a promissory note was sent by registered post and the party liable refused to receive the post, the bill was held to be dishonored. Okay, so this is dishonor by non-payment. Right, sir? Now, we come to the last topic, dishonor of checks. Somebody was talking about it in another way. They said bouncing, check bouncing, where any check drawn by a person on an account maintained by him with a banker for payment of any amount of money to another person from that account for the discharge in whole or in part of any debt or other liability. So a check given as a gift or donation or a security or in discharge of a mere moral obligation or for any illegal consideration would be outside the purview. Suppose my uncle gives me a gift of 5 lakhs. He gives me a check. I present it dishonored. I cannot do anything. Okay. Or I go to a well-known philanthropist and I say, sir, for this trust, I need some donation. He said, no problem, Mr. Srikanth, take 25 lakhs. And in front of a meeting, photo opportunity, he gives the check and takes the photo, puts it in the newspaper, runs away. Then 5 days later, I present it, bounced. Nothing can be done because it was given as a gift or donation. Or there is some other obligation, collateral has been given. In addition to that, I'm also taking a promissory note and keeping it. That's a moral obligation or only a security. Okay, or where you do something illegal for me, for that I promise to pay and I give a promissory note, that is for illegal consideration. In those cases, I give a check for illegal consideration. First of all, for illegal consideration, you should not give checking. Now should check be accepted. Okay. But if some fool is giving check and accepting check, and that check is bounced, what you can do? You can go to court and tell, I agreed to murder so-and-so on behalf of this gentleman. He gave me a check of 5 lakhs as an advance. That check is bounced, Your Honor. First, Your Honor will say, forget the check. You arrest this fellow and put him in jail for criminal actions. Okay, so illegal consideration also not allowed. And that check is returned by the bank unpaid. Either because the amount of money standing to the credit is insufficient or it exceeds the amount arranged to be paid. I told you now, there are only two things. You have money in the bank, you issued the check, it will be honored. You issue the check, no money in the bank, then insufficient. Or you have a loan with the bank. By virtue of that loan, the bank has agreed to pass checks up to 1 crore. Now you have already drawn 1 crore 10 lakhs and you give a check to me for 5 lakhs. Maybe honorably and honestly, thinking that a check will be credited, you gave it, but it didn't get credited, whatever it is. I presented the check bounced. What they will write? Exceeds arrangement. In either of these two cases, I am entitled to file a complaint under section 138. So the person who bounced the check shall be deemed to have committed an offense and shall be punishable with imprisonment for a term which may extend to 2 years, or with fine which may extend to twice the amount of the check, or with both. Why is the punishment so harsh? 2 years imprisonment and double, because trust in checks should not be destroyed. We should make this check bouncer an example in front of society so that everybody will know that if I bounce the check, immediately they will arrest me and I will have to pay. If I have given a check for 5 lakhs, I have to pay 5 lakhs plus another 5 lakhs. Why? 5 lakhs will be paid to the check guy who is not paid, because in compensation for his payment, and another 5 lakhs to the government for as a punishment for bouncing checks. Why? Because the confidence in checks has been destroyed by this gentleman by bouncing. Therefore, for that act of criminal offense, he has to pay a penalty which is equal to the amount of the check. So 2 times. One amount will be paid to the check holder for his, because that's what he's come now. Putting this guy in prison, what use it is? Boss, he gave me a check for 10 lakhs. He bounced it. Now, putting him in prison is good, but I want my 10 lakhs. So immediately the order will be passed. They will say, pay 20 lakhs. 10 lakhs will be given to this guy and the balance 10 lakhs will be taken by the government. In addition to that, the person who has committed the offense may be asked to pay the cost also. Maybe. That is the lawyer fees of the complainant. That also will not be paid by him. Why I should bear? My lawyer will fight for that. He say, cost, Your Honor. Such a check bouncer should pay the cost also. But interest cannot be claimed under this section. Okay? Only the amount of the check. Because please understand, section 138 is a summary proceeding. You have to establish check was presented within the validity period of 3 months. Demand or payment through notice in writing within 30 days. Check was presented, bounced. Then you have to send a demand for payment through notice in writing within 30 days. Best thing is to send a lawyer notice. The lawyer will say, whereas our clients have received a check from you, number so-and-so, dated so-and-so, whereas you have proof enclosed. It was, whereas the check was returned by your bankers, said insufficient funds, whereas my client has been affected by this, whereas now we demand from you payment within 15 days from the date of receipt of this notice, failing which my client will be constrained to make a complaint against you under section 138 of the Negotiable Instruments Act. Once he receives this notice, ideally what he should do, he should pay. But there are many hardened criminals. Even after the legal notice is served, they will not pay. Rascals they are. Okay. But then we have another remedy. We'll come to that. In case the dryer does not make the payment within 15 days, then immediately the court will send an order to the police station. This bugger will be caught by the collar and taken to the jail, remand. Then only come to court and talk. Okay. Where a person instructed his bank to stop payment of a post-dated check due to non-availability, the adequate amount 138 is infracted. Please understand, where I explained this yesterday to you. Now again I'm telling you, money is there in the bank. I'm stopping payment. I'm entitled because you have done some nonsense. That's why I'm stopping payment. I'm sorry, not you. The other person has done some nonsense. That is why I'm stopping payment. But if money is not there, I cannot use stop payment to escape liability. So when on that day, if the adequate amount is not in the account, stop payment will not help. Are you able to understand? Two different conditions. Understand the condition. Money is there in the account, stop payment, no problem, no check bouncing. Money is not there in the account, he issues a stop payment, then refer to dryer, then section 138 is attracted. There is no confusion here. Clearly, you should know which condition will apply when. Period of 3 months shall be computed from the date mentioned on the check. From that day, obviously you won't include that day. From that day, you will count 3 months. So we have come to an end of this topic, negotiable instruments, which is good. If I still have time, I don't want to rush. I'm willing to go anywhere and answer any question throughout this topic, right from kinds of negotiable instruments to endorsement, to holder in due course, to presentment for, dishonor, discharge, dishonor, check bouncing. Okay. Sir, check given by a company, if it's bounced, it will be liable under 138. Sir. CSR liability, blah, blah. Okay, I'll do one thing. I am not able to answer that question. You become the CFO of a company, give me a check for CSR, bounce it. I will file a case against you under 138. Let it go to Supreme Court. Let Supreme Court decide the matter. Why Srikanth should do it? His knowledge limitation is there. Better we do this in practice and see. You become the CFO of a company. Give my Rotary Club a check for 138. It's a check for about 10 lakhs. We will present it. It will bounce. Then I will sue your company under 138. You defend your company. We will see who will win. We will see it in High Court or Supreme Court. What do you say? I'm ready. Are you ready? These are all hypothetical questions. I don't want to answer them. Okay. We will try it. Okay. Because CSR commitment, see, you can argue so much, Mr. Abdul. See, CSR commitment is a statutory commitment. Yeah. Okay. And for example, if for CSR, we have to enter into an agreement with that NGO. So agreement is there, contractual. You are coming on contractual obligation. I can catch you. Boss, it's a very, very complicated question of law and fact. I cannot answer it across the class like this. No, I am not a fool to answer like that. It's easy to ask the question. You know how complicated your question is? In fact, I should be so many things. I'm telling you now, you become CFO, you bounce the check. I will file a suit from my Rotary Club, trust. We will see where it goes. According to me, it is 138 action is possible. But if you argue, means don't argue here. Put your money where your mouth is. Let's go to High Court. There we'll argue. Okay. Quickly, because we have some time. Yes, articleship you ask. I will answer. Because we have some time. See, again, Abdul, I'm not trying to challenge you. I'm saying, see, these are all type of questions, are all very hypothetical questions. But if you ask this question in my guru's class, you will get very angry. You'll get very angry if such questions are asked in the class. But I like these questions because out of, say, 10 stupid questions, one intelligent question will come. That is why I allow questions. But be careful, okay? See, CSR, you are trying to argue on one point. You are saying CSR is a donation like that. No, sir, it is not. Because it is a part of your statutory obligation. And I will enter into an agreement with you for conducting the CSR activities. You are not giving me as a donation. You are routing it through my NGO for doing some CSR activity. Based on your money coming, I have committed myself on many, many things. Now you are coming and bouncing your check. I will go to 138 case against you. Sure. And we will see what happens. I got the best lawyers with me, including my own son. I'll see to it that your company will be, your MD will be put in prison. When section 130, I will put him in jail under 138. Just for the fun of it, I will do it. When section 138 will not be attracted, sir, please repeat that part. Huh? Which one? 138 will be attracted when there is a bouncing. How we can say it is not attracted? Check given as gift or donation. See, pure gifting. See, the idea of gift or donation is consideration. Where there is no consideration, then it is a gift or donation. Are you able to understand? In those cases, when there is a check bouncing, 138 will not apply. Or where it is, there is no money. The check is, actual money has not been paid. Okay, but I'm giving a check as a kind of a security. Okay. Or there is a moral obligation to do something. And you tell me, sir, I can't believe you. You give me 1 lakh check and keep it. Once you finish that work, I will give it to you. So that check is not given as a payment to you. It is only given as a security for a moral obligation. In those cases, if there is a bounce, then I'm not liable because I didn't give it to you as a payment. I give it to you. The idea was you will keep it. In case I do not discharge my moral obligation, you can present it. In the meantime, you go and present it and it's bounced, not liable like that. Or for illegal consideration, I think you understood it. I am asking you to do something illegal, boss. I'm giving you a check. You present it. It is bounced. You can't go under 130. I mean, trying to do it. Then in the court, first thing they will ask, why did you agree to do that? First, that case will go on. That's a typical question, boss. Typical question. Big Four is the best way. See, mid-size and small firms like mine are not good for learning. Better to go to Big Four. We are all very small now. We don't have that much knowledge to help you. Better go for Big Four. I think. What do you say? Even mid-size firm also, maybe. But for you should go to Big Four. Nothing less than that. I mean, that is the way I have to answer this question here. This question itself is not. See, you should ask, what is your plan of action? Then you decide which firm to go to. Okay, now that I have answered in one way, I'll answer in another way. If you want to join corporate employment, if you want to become a CFO, if you want to be, your goal is to get into employment in large corporate, do with Big Four. Because they have, your CV looks nice with the Big Four in it. Are you able to understand? No, you want to be in practice on your own or in partnership with a senior. Then join a mid-size or even a decent small firm like mine with say 2 crore billing, where the senior is there. He will also help you. He will teach you whatever he can, not as much as Big Four. Of course, I worked as an audit manager in Price Waterhouse. If I had continued, I would have become partner Price Waterhouse. That is not the point. Point is, small firms can give you value and then you can learn how to practice. If you want to be practiced, then do in mid-size or small firm. But if you want to get into corporate employment, you should only do in Big Four. Suppose you want to practice, but still you want some knowledge, then you go to Big Four, but very difficult to come back to practice. Because by then you'll be so used. See, Big Four will pay you 10,000. Second year of articles, they'll pay you 15,000. Third year of articles, they'll pay you 25,000. So that type of money, once you start earning, no, you will not be able to come back. So you go for corporate employment, your life, then Big Four. This is my view. And you asked me, I'm giving my view. Which is why I did my articles with my father, a small practitioner. Then I went to Price Waterhouse and did 3 years of junior officer audit. I learned. Post-qualification, I earned and learned. Then I came back and started my own practice, 1991, and I built it on my own. My father practiced, he had it separately. I separately practiced, and I built my practice to what it is now. About 2 crore we built, 600 clients. We are happy with what we are doing. I'm master of my own fate. So it depends on your attitude. But if you ask me, catch my collar and say, you tell me Big Four, mid or small, I'll say Big Four. Go to Big Four. Okay. Good show. Wonderful. We had a great time. I might have been a little short-tempered, or not short-tempered, little casual with Abdul and Aslam and all. But I love these guys. And I wish all of you a great future. Whatever may be your dreams, attain it. Become a chartered accountant, become a chartered accountant, become successful. Whatever the mind can conceive, it can achieve. Believe in your ability to succeed. Never let go of that belief. Have always positive thoughts. Never have thoughts that are not positive. Okay, I'm not even saying negative. Always have positive thoughts. You'll definitely succeed. Exam is easy. You can easily clear it. And then do your articles, write your final exam, become member of our institute, and be successful in life. Thank you very much. Wishing you all a great examination success, and bye.